Welcome back, everyone, to another episode of Profiles in Risk. I am your host, Nick Lamparelli. We're mixing it up a little bit today on site down in Florida. My co-host, Wesley Todd, who's the co-founder or founder and CEO of CaseGlide. And today we're very pleased to, again, have in-house John Jerger Jr. John is the president of American Traditions Insurance Company. He is also the COO of West Point Underwriters, and the Jerger family has been involved in Florida insurance since 1946. It's basically in his DNA, and so if anyone has a lot to talk about and can really describe the ins and outs of an insurance operation, it's this guy. So, John, Wes, good to talk to you today.
Yeah, we're reporting live on the scene here. Yeah, we made it in the office. Luckily, it's right nearby.
That's awesome. That's awesome. We should do this more often. Actually, John, we were talking to Werner, who was the prior episode, and saying we should do it on the deck, on a deck, with a margarita somewhere warm in Florida.
How awesome would that be? Well, yeah,
it's not warm right now, but
yeah. Well, I watched the Pro Bowl yesterday, and it was raining.
Yeah.
How disappointing is that?
Yeah.
Pro Bowl by itself is going to be disappointing, but then that, yeah.
I know. I wonder, do you think it was the players that moved it to Florida? Because I would have thought that they would have preferred to go to Hawaii.
Yesterday, it would have definitely rather been in Hawaii.
Yeah, absolutely.
I wonder if the Pats even remember or even found out that the Pro Bowl is in Orlando, because they haven't been to the Pro Bowl in 10 years. He's a big Pats fan. They've been to the Pro Bowl in 10 years because they're always in the Super Bowl.
Yeah. That's true. That's true. We don't even know what the Pro Bowl is. It's just like...
Nah. You definitely think it's still in Hawaii.
Yeah. John, welcome. I appreciate you having you here. Wes has been very high. Our goal for this, when Wes and I were first talking about this last year, was, there are all of these marvelous insurance executives in the state of Florida. And that's because Florida is probably the most challenging insurance market in the world, definitely at the top, right? And so, and the Florida insurance companies sort of fly under the radar. They don't, they're not the AIGs or the Chubbs, but they're like phenomenal in their ability to navigate the minefield that is Florida. So I wanted to start right off and just say American Traditions. Should we start there? Should we start with West Point? What out of these entities that you're working on, what's the one that sort of makes you the proudest of like what you've been able to accomplish?
Well, I think I'm proud of both companies, especially in this industry. West Point was started as an MGA back in 2000 with the idea of working in niche market that my family had a big background in, which was mobile homes or manufactured housing. That kind of morphed into a backroom processing operation over time. And I think it was because we saw the need for technology, we saw the need for more automation, and back then the internet was still fairly new when it came to insurance. So we kind of automated the process and tried to make it as simple as possible for agents to process that business as quickly as possible. As we grew, we saw a need after the storms of 05 and 06, or 04 and 05, that there was a need to start a new insurance company for manufactured housing, because the only game in town really at that point was Citizens Bank, Citizens Property Insurance Company.
Yeah, and so for anyone that's listening, Citizens is like I don't think they're state owned; they're just state run, sort of.
Yeah, state run. Yeah, state run. Yeah, correct. They're basically the government entity for insurance when there's nobody else to write it. At least that's the idea. And that happened after Hurricane Andrew back in '92, and it's kind of morphed into what it's called today, which is Citizens Property Insurance Company. Part of the reason I think there's been so much growth with so many different insurance companies in Florida is because of the fact that there were so many that pulled out of after 04 and 05 and said, we're not really interested in writing in Florida. It's a dangerous place to write because of the hurricanes, because of the litigious nature. And so then Citizens made it so palatable for folks to try to pull business out of there because they gave them unearned premium to do so, they gave them ceding commission to do so. And so you saw these new companies start to morph out of that. What I'm proud of from our perspective when it comes to American traditions is we did it all the old-fashioned way. We didn't take out from the Citizens. We wrote everything through agents, through retail agents, from cradle to grave.
Yeah, which is amazing because again, for those that are listening, the standard operating procedure was you get a bunch of reinsurance capital from Bermuda, and then you go to Citizens and you just basically buy a book and you manage. So you actually did it the hard way, one policy at a time.
We did, and there's nothing to say that the other way doesn't work as well. I mean, it did work for a long time. Now that Citizens is about 500,000 policies versus 1.5 million policies, it's much more difficult to get good quality business out of that book of Citizens Property Insurance Company. But again, we've always spent our time on niche products in the state of Florida, and manufactured housing is one of those niches. I think we're the leading manufactured housing writer in Florida. I don't think there's anybody bigger than us. And I think moving forward, one of the things that was most appreciative of my crew here and what we were able to accomplish is after Hurricane Irma. We've never been tested like that. In 19,000, almost 20,000 claims that we had to process. And getting through that is tougher than you believe.
So before we jump into the technology part of it, Florida insurance. For those that, maybe underappreciate the types of things you have to worry about, why don't you kind of check the boxes off, list all of the things that make Florida such a unique market. Now, of course, everyone listening will say, well, hurricanes, but it goes well beyond that, doesn't it?
I wish hurricanes were the only thing I had to deal with.
That would be nice.
And we were talking about this earlier. You said you had a partner, a co-founder that was saying how hard can it be? It's just a piece of paper. And I have this conversation with friends of mine all the time. They say, how hard can it be? I said, it's like a bank, but it goes further than that. We're treated like a bank when it comes to how we're regulated in Florida. But we have to look at, all right, how much property can we write in what geographic area in Florida? Florida's unto its own. It's the largest purchaser of reinsurance in small capita in the world. We buy far more reinsurance than anybody else out there, and it's much more expensive than anywhere else. So we have to look at reinsurance. We have to look at how we spread our risk. We can't spread it in just one geographic area because that costs us more. Because then we have to look at what does the model say. We have these models. Two of the most prevalent are AIR and RMS. You have to run your book through that model. Correct, AIR.
Wow.
He's wearing the jacket.
Uh-huh.
You have to run it through those models, and then it's going to determine how much reinsurance you have to buy. And that's only a guidance, because AIR can be one number and RMS can be a far different number. It's also what you put into those models that is what output you get. So you have to look at what you're putting into the models to see what you're going to get out as a result. You have to determine how much are you going to buy at what point in time. In Florida, 6/1 is the beginning of the reinsurance season for hurricanes, and it ends at the end of November. So you have to look at what point in that timeline am I going to buy my reinsurance, and you have to buy 1 in 100. So then we're also regulated by the department. So we have what we call the OIR here in Florida, Office of Insurance Regulation, and we have to tell them here's what we're buying to, and it's 1 in 100, and we have to certify that. Once you get past that, you also have to go to Demotech or AM Best, and you have to show them that you're purchasing 1 in 100. AM Best likes to see 2 1 in the hundreds. In Florida, we also have what's called the Florida Hurricane Cat Fund, which is another reinsurance element that we have to fit into the mix with our private reinsurance market. And it changes and morphs every year based on how much business you write and what geographic area. Those are just a few of the things that we have to deal with in Florida.
Well, Florida, I believe, is in the top 5 for the number of ground-making tornadoes.
Yes.
I think it's the number 1 state in the country for lightning.
Yes. Number 1 state in the world, I believe, for lightning.
Wow.
I think it's the number 1 state in the country for sinkholes.
Yeah, that's for sure.
It's not as bad.
No.
Okay. And what else do we have? We have, so those are just a few. So hurricanes bring floods. So it is by far the number 1 policy seller of NFIP flood policies.
Correct.
Okay. And then to top it all off, it has a very unique litigation problem where lawyers have become very sophisticated. The assignment of benefits, which we talked about with Werner, again, causing all kinds of mayhem in the market where claimants can turn over their claims to lawyers and have them squeeze the living heck out of the insurance companies.
And assignment of benefits is only one part of it. Really, there's another part of it, which is the one-way attorney's fees, which I'm not sure what Warner went into, but
We'll talk about that, yeah.
One-way attorney's fees is about 75% of the problem. Assignment of benefits is only 25% of that problem. And the reason for that is legislators wanted to protect insurers against insurers that were trying to bully, big, large insurance companies that were trying to bully in claim settlement. So they created the ability for an insured to sue their insurance company if they felt that they didn't get enough money to put their home back in the place it was before the loss. The problem with one-way attorney's fees is if you go into a court of law and you have a jury, and that jury says, well, I know you wanted to give them $10,000, but I think you should give them $10,500. And it could be as little as $1 over what the insurance company wanted to settle that for. They then have to pay all of the attorney's fees to the insured's lawyers. And there's multiples on that as well. So that's where it has become problematic, because say in that $10,500 example, they might get $40, $50, $60, $100,000 on the attorney's fees for that rather small loss. And that's where it's become very litigious in Florida, because they know they hold all the cards and really don't have the ability to fight them like they could.
Wes, what do you see? First, I'm wondering, what are you seeing in regards to insurers looking to avoid that situation? So they're padding the claims, 1, and 2, for those that do go to litigation or some sort of arbitration or however it's handled. I'm not the legal person. What's the split of the insurer wins versus the insured wins? Like, could you kind of outline that for us?
Yeah, so, on the first question of just thinking of, John mentioned 5 or 6 people involved in just figuring out if they can do business. And then when a claim is made, there's another 10 people. And some of those people are not on our side, like the contractor that will come in and try to make a repair, or the attorney or the plumber. And all these people are all talking to each other about creating that situation that John just talked about. So you think you're an insurance company, you go back to, the first question, which is so good about, what are the things you got to look out for? And not only do you have to worry about all the things before you bind a policy, you got to worry about these probably 10 or 15 people involved at different stages in a claim on your side, and unfortunately on their side too. And so all of those people, when given a chance, are going to try to make the most out of the opportunity, not only to the insurance company's detriment, but to the detriment of the homeowner and the plumber and whoever else. So in John's example where somebody, which is the most common example, where somebody says, oh, it was actually another $100 you left out on my kitchen rebuild when I had that water leak, that attorney, if they go to a trial and the homeowner gets 100, the attorney's going to get more like $250,000 because, yeah, they worked up $100,000 worth of expense because they get to charge $500 an hour here in Florida because of a made-up rule. They also get to get 2 times that because they get a multiplier, as John alluded to, that says, well, you could have lost this case and you would have gotten 0. So since you took that risk on behalf of public policy, we're going to give you 2 times that. They wind up with $200,000. And so how often, so to answer your question about the trial, the problem in a case like this, where it's an insurance company, this is first party, right? So it's an insurance company, and on the other side is the homeowner. It's kind of an empty chair at the insurance company. Now, there's been some things that have made people are very sophisticated now on the insurance side, and they'll have a very good corporate representative that'll be the face of the insurance company. But in reality, it's a company versus a person, and a jury is a group of people. So just by their nature, they're going to side with the people a lot more often than not, which goes back and puts us in that position of, well, unfortunately now it's in our best interest most of the time, not all the time. These companies still win trials and they win them often, but it's in our best interest to make sure that each of those people gets a fair amount. All 15 of those people get some little fair amount. They can divvy it out how they want it. We're going to give them a fair, excess of what we probably could have repaired this home for if we were dealing directly with the homeowner. Homeowner's not going to get an extra penny. All these other people are going to get it split because that's just how Florida's set up. So, that's why everybody's paying ridiculous amounts for insurance here. Because that's tying it all back again together. It's a very hard business to run, but if you know your math, you know what it costs. And unfortunately, it's the people that wind up paying that put that bill every year.
And unfortunately, going to court on every single case gets very, very expensive, from the defense costs and from the plaintiff's side. So more often than not, we push it into appraisal, which you have your appraiser, they have their appraiser, and then there's typically an umpire. And most times the umpire splits the baby. So something that should have cost you $20,000, when they're saying it should cost $60,000, ends up costing you $40,000. And sometimes attorney's fees gets brought into that equation as well. You have mediation. That's another alternative dispute resolution. But mediation, again, gets into attorney's fees and costs and escalates the cost to defend these things. And unfortunately, at the end of the day, all of this gets pushed back to the insured in the premiums. And that's part of the reason we're in the boat we're in today, where rates are just continuing to escalate. It's not because of most people think it's because of all these hurricanes we've had. It's not because of these hurricanes we've had. We had 12 good years without hurricanes, and we still had rising rates. And part of that rising rates back then was sinkhole. Well, once we fixed sinkhole through legislation, we moved on to what we have now, which is this litigious nature with AOBs and with one-way attorney fees.
Okay, so 2 additional questions. How sympathetic are the regulators to this? I'm assuming these extraneous costs can be factored into rate making. Is that true?
They can, but it typically takes 18 months from today to realize that loss of income or that loss of premium.
You got to be really good at math.
So you have to be really good at math, and you have to be able to see how fast it's escalating. Thanks to Wesley, part of that, part of the ability to understand that comes from the reporting that he gives us, so we can understand how fast it's escalating and what we have to do to try to combat that. But it's also coming in the way of forms. We're giving less water coverage than we ever did before. We used to get full water coverage, meaning if you had a pipe break in your house and it caused $20,000 worth of damage, we would give you $20,000 to fix the house. A lot of companies, including our own, are going to a limited water exclusion damage, or $10,000 worth of coverage, or no coverage at all, depending on the age of the home. And it's being driven partially by lawyers embellishing the amount of the loss. And unfortunately, we all use special software to determine what it's going to cost to rebuild rooms in a house or rebuild a house. And depending on the quality of the materials that you say that house was built by, decides the amount of the loss. And on the plaintiff side, they embellish the goods that were in the house, whatever flooring, whatever wall material, whatever cabinets, and that escalates the cost of what it may cost to put them back in the same place they were before.
Yeah. So then my follow-up question to that would be, how sympathetic are the legislators? Wes, you and I did a whole episode last year on assignment of benefits.
Yep.
I didn't even realize this other hangnail that is causing so much pain to the industry. I follow John Rollins on Twitter. He's always railing about this. Lisa Miller's always railing about this in her newsletter, and yet it doesn't seem like anything is being done about it.
It always takes about 3 to 5 years for us to get legislators to understand what the problem really is, because they don't want to believe it early on. Like sinkhole. It took years for us to finally get meaningful sinkhole language, or sinkhole language at all, to fix the problem. We didn't have a big sinkhole problem before lawyers created it, and we don't have a big sinkhole problem today. Yes, we have sinkholes, but they're not. Florida's not complete Swiss cheese, and everything's falling into the ground. Much like today, we're willing to work with companies to do water extraction, but we're not going to be held hostage by water extraction companies to say that a room the size that we're sitting in right now should cost 2 or 3 times what I can get 5 other companies to do. It would be like going to Home Depot and then going to Lowe's, and the cost for a product is 2 or 3 times in Lowe's what it costs in Home Depot. Is the product made that much better? No, I don't think so. Just like a home, once you know what materials are in that home, the cost shouldn't vary by much. Unfortunately, the way these other folks play the game, the costs vary drastically.
Yeah, and with the legislation, so, I remember with sinkhole, it was something like Citizens had spent $1.2 billion on sinkhole claims in the last year before they had reform, and they only had $200 million in premium for it. So, yeah, to John's point, it's going to take time. I think one of the major issues for Florida, at least, and I think across the country, is that, and this is for every company, listening to this, not just Florida, the plaintiffs' lawyers, it's that tipping point where they have more and more control of the legislature. They don't have full control, but they do have a lot of influence in a lot of legislatures across the country. I mean, they're governors in a lot of the states, and they, very well could be the governor here one day. And so the legislature will, make the changes, but it's not. But common sense doesn't prevail. It will take a while because there's competing interests within the legislature, where there's, unfortunately, even though there's only 15 or so people benefiting from the whole thing in Florida, they have three, they have probably representation of 30% of who has to make a decision on this, even though it's 15 people versus 15 million Floridians that pay the price for it.
So going back to your question, the legislative body that we have in control today knows and understands the problem more so than they have in past years. They understand some of the key drivers. They're more focused on assignment of benefits because that's what we've been complaining about the most for the last 3 to 5 years. But they also understand when attorney's fees is impactful as well. We haven't even been able to get off first base with one-way attorney's fees in the past, whereas this year we believe that not only will we find some meaningful legislation that occurs as a result of some of the legislation that's being proposed out there today, by Senator Broxton and others. But we think we can get something done meaningful on one-way attorney's fees as well to try to kind of even the playing field. We know that the governor's behind it. It's one of his biggest objectives. We know the CFO is behind it. Again, we have many senators and representatives are behind it. And of course, our commissioner is behind fixing this problem because they know it's raising rates. They know that it's causing grief for homeowners all across the state. And the only way to fix it is to fix the underlying issue because we haven't had much success in the courts where we were hoping we would have success. So we have to fix it legislatively.
Yeah.
Yeah. I'll just add real quick. I mean, it's you used the word niche, and that's one of the things that we talked about, Nick, is if the InsurTechs and the people in this market could understand that insurance is nothing but a bunch of niches, right? Like no matter where you are, if your workers' comp up in New York or your product liability in California or whatever it might be, and that's like what you have to understand. So you think about all these problems, these $100 million to $1 billion problems just in Florida. These exist all over the country in different forms of fashion. Not all as big, but this is what the market has to understand. They got to hear out these details and understand, or else you can't solve the problem for these people. And so what we've done, what a lot of I think successful companies have done, and like what your company's doing, is you're just zoomed in and locked in on some individual problem that may not be easy to figure out, but once you figure it out, it's $1 billion problem or multi-$100 million problem, and the solution to it's worth a lot of money and worth a lot of time and worth a lot of effort. And so, to our discussion earlier, Nick, this is right in line with the message that I think the insurance nerds and the profiles and risk audience need to hear about. Nailing a niche, really understanding one specific part of insurance before trying to understand everything.
Yeah. We're going to transition over to technology and talk about that, but I'm always reminded of a saying from John Rollins. He's like, it doesn't take long before, as the rates get up, the peasants with the pitchforks show up in Tallahassee and they make the difference. Like ultimately, if this problem keeps existing, the rates are just going to keep going up.
Sure.
And the solution will be to make a change because the peasants with the pitchforks are going to want rate relief.
Yep.
Yeah, I want.
And people just don't understand that thing.
Yeah.
Until it's greater.
So, John, it's a fascinating story with American Traditions because you started from scratch, 0 policies.
Correct.
My company started with 0 policies. I don't think people recognize how problematic that is for someone that's starting. Problematic to get reinsurance, problematic to get brokers to take you seriously. You're starting from scratch, and nobody really in insurance. No one really wants to start from scratch. Reinsurers or people that are going to give you capital, they want a book that's in place, so they have a little bit of certainty about, what kind of losses are you going to be sending us, that kind of thing. And brokers want to know that there's the capacity behind it before they start selling, pitching their customers to buy your product. I got to believe technology played a big role in helping you kind of roll this up to what it is today. We already talked about AIR and RMS and CAP models, but can you sort of talk about with American Traditions? You can talk about West Point as well. Specifically, how has technology helped you? How have you been able to layer and implement it over time in order for you to grow your book to where it is today?
Well, like I said, we started West Point in 2000, and part of the reason we did that was for technology. We saw a big need for agents to have relief because the old way of writing policies took them, it could take them 30, 40 minutes to write a policy. Our objective was to get them from cradle to grave done and have that policy back on their lap within 5 minutes. And I think that made a big difference, especially when we started in 2006 with American Traditions. We wanted to make it as simple as possible for them to tell us what park that policy is in. We already know all about that park because we have a database that lets us know everything about a certain park anywhere in the state of Florida. Then we know how many units are in that park. So geographically, depending on where it is, depending on how big the park is, will only take so much business in that one park, because then you get into a situation where you could have, you know, a localized tornado or a localized hailstorm that could cause you grief, not just a hurricane. So we want to try to limit the amount of business we'll write in a geographic area or a park. Those pieces are really big, and then part of that is capacity. You know, we used to use a map back in my early days before I started West Point or American Traditions, back in my family's old insurance shop, where we use thumbtacks on a map to give us kind of an idea of how much we were writing in an area. And that, you know, it's kind of in its simplest form. But when we wrote the new system, one of the things we wanted was capacity constraints. So we wrote part of the system that basically allows us to say how much capacity we want in any geographic area, and that goes down to the park level in mobile homes cases, or a zip code in the case of in the form of homeowners, because we have to buy reinsurance, and we know if we concentrate too much in one geographic area, it's going to cost us more. So we also made the ability to where we could grow geographically at kind of a normalized pace, so that we weren't growing all in one area where it was needed most, like say Tri-County area, Miami-Dade, Broward, Palm Beach. You know, you could open up that tomorrow and say, I want 25 million of exposure this year, 25 million in premium this year. You can write all 25 million in 5 minutes down in the Tri-County area, because that's got a great need, and that's where you have the most litigious issue in Florida. So you have to kind of be able to normalize that and make sure that you spread it over time as well as geographic area. And those are kind of some of the things that we did to try to differentiate ourselves. We continue to try to find ways to differentiate ourselves with the agents, both with West Point and American Traditions. And when West Point develops something, they try to develop it for all clients, not just one client. They want to try to make it simpler and easier at all times for an insurance company to be able to manage their risks and manage their portfolio. So that we've developed a data warehouse, so that using Excel, which everybody is familiar with in the insurance world, it's easier than something like, say, a Cognos, where you have to have very specialized individuals to write those risks, or to write those programs. In our case, Excel gives more end users a little bit more flexibility, so they can kind of play with a report more so than somebody that was trying to do with Cognos and having to go to a third party and say, hey, can you write this report for me, every time they want to just drill down one more layer. So those are the type of things that we've tried to create in West Point and American Traditions to kind of make technology work for us.
I think there's some lessons here, Wes. This is sort of what we talked a little bit about this last week, around the concept of niching and how you do that. And for like folks that are creating startups and they're coming in, like let's go outside of both of our realms. Let's say like earthquake. Well, if you wanna do something around earthquake, you should be in California. That doesn't necessarily mean you have to be in San Francisco, and it doesn't necessarily mean you have to be in Los Angeles. Like, you can create your niche. You can stay away from like the areas where it's going to be really, like in your case, Tri-County, it'd be really difficult for you to get significant capacity. It's going to be expensive capacity. So just to get started, yeah, you can get a lot of business there, but it doesn't necessarily, it's not necessarily going to give you a good start to the business. You might be better off going up to Jacksonville or over to, the Panhandle part, start there, and then slowly work your way down. And I think that's a very important concept when it comes towards niching, is that you can keep shaving that down. And you should, as advice for those that are listening, keep shaving it down so that you can prove your concept, but also get some traction at the same time.
Correct, and that can come in the way of products as well. We saw a need for a DP1 product for mobile homes or manufactured homes in Florida. There are a lot of Canadians that come down. They have a second home here. They don't really want to buy a ton of insurance for that manufactured home because they don't really need it. They just want it in case of, say, you have a hurricane and the manufactured home gets completely destroyed. They want debris removal so that they can get it off that leased lot or that rented lot or their own lot, for that matter. Say they want a little liability because somebody might slip and fall, and they want to make sure they have a little bit of liability so that they're not worried about those kinds of issues. So it can come in product as well as some of the other things that you shave away.
I just want to chime in here. So one thing that I heard was it's almost been 20 years since West Point was up and running.
Yeah.
Which is kind of crazy. You think about all the stuff Nick and I hear about every day, stuff that's been around for 20 days, and 20 years is kind of crazy.
Yeah, like the big things like chatbots and stuff like that. But you had been building technology for insurance
20 years.
Forever, and I think it because it's not mainstream, people think it doesn't exist.
Yeah, and another thing, just talk about nailing a niche. So John's technology was so good that everybody else in the state was using it. That everybody else in the state and outside of the state, use it. So you talk about nailing a niche. It was so good that he could take the technology he built for his own company and all these other companies, that could just subscribe to it. And that is,
and just continuing to
market fit.
Continue to morph into the newer technologies, having to try to stay up with the newer technologies. Those are all things that we continue to pride ourselves and spend money on because, for instance, what I was talking about before with the data warehouse with Excel, most companies won't try to move forward with that type of technology because there's not a lot of folks that are experts in it yet. Because it was a newer Microsoft product because they saw a niche that other companies were successful at and said, we need to try to find a way to jump into that niche. And that's kind of the thing that we've prided ourselves in over the years is finding niches and trying to be best in class at them.
Yeah, and that reminds me of a tweet that I saw this morning. It was from a VC, and it was basically the startup and the VC. So the startup gives this pitch. The VC says, we're not interested at this time. The startup says, oh, we were thinking about adding AI. The VC immediately responds, ooh, that's interesting. And then added like one buzzword after the other. And the VC's like, okay, how much money do you want? So I want to dig in a little bit. I think this is probably a good way to kind of round out this particular episode, Wes, is to talk about, John, how you contemplate technology. Because the buzzwords, right? There's blockchain and chatbots and drones and all of this stuff, and it must become overwhelming. For one thing, I think you're just large enough that you can remain nimble.
Yeah.
But for a lot of insurers, they can't do that. And for a lot of startups that are coming in, they're going to want to implement all the technologies. So how do you successfully contemplate and evaluate, how you want to, like, what can the technology bring value to the company and how do we implement it?
It's a good segue. I guess the biggest thing we've seen is like with blockchain. Everybody says blockchain is going to be the biggest thing in the next 5 to 10 years. It's already kind of taking hold in banks. So, of course, we have to look at it and see what it brings to the table, how much better is it, then how hard is it going to be to implement, and what kind of experts do we need in that field. And I would say blockchain is a perfect example of you need a different caliber person to handle blockchain appropriately. I always look at it as put 5 developers in a room and say, here's how we're going to develop this code, and you get 5 different answers as to what the best way is to develop that code. Everybody has their own little nuances. There are best practices, but everybody believes their way is the best way. So we have to look at what's out there, what are people clamoring for, and which route is going to be the best route. What do we take on first? You're talking about automation and bots. There's pieces in that realm that are very important. One of the things that we implemented was a thing called Falcon Fix, where we can run scenarios through the system using automation rather than human input. And very quickly you can find out whether you have a problem with some piece of code that you've developed. Back years ago, it was a much different process. We didn't have all those automated tools that you could use to get to the answer very quickly and feel more comfortable because you're running millions of scenarios, not hundreds of scenarios. When we're looking at what pieces we're going to continue to develop, it depends on which pieces we're talking to our clients about that have the most need. So wherever that need is where we kind of try to work with them to bring it to the table and get it implemented. I don't know that there's any right answer as to what the next greatest and latest is going to be. Everybody has their weaknesses. Everybody has their strengths. I think at the end of the day, it's about the customer service. It's about making sure that you're trying to take care of that client at all possible times. It's trying to understand the business need that they have and make sure that you can fulfill that business need. And a lot of times developers and companies that are more automated driven and technology driven, they forget about the client and forget about what their need is and only think about their own needs. And what we try to do at West Point is think about the client's needs, understand that they have a business need, and that business need will generate not only revenue for them, but generate revenue for the technology company as well.
It's so subtle. I was listening to someone talk about a call-in center where they were talking to a chatbot that sounded human. Mm-hmm. And the whole system, it unnerved the person a little bit because they could hear fake typing in the background. And it's true, right? Like you feel as though it's phony.
Yeah.
And it was counterproductive. And I can understand like how you would want to automate that process, but they pushed it so far that it's phony, and the person that was describing this was unnerved by it. Now, maybe that's something that we humans just need to get used to, but that's the day and age that we live in. Like, just being able to interact with that and being able to figure out whether that provides value or not, or whether you just want a human being, a real one, for the extra cost that it's going to take to make someone feel better.
Yeah. And anybody that's trying to make it sound so simple and say, blockchain, in 5 years, and the bots, and anybody that's trying to bring these things and tell you that, 8 out of 9 people aren't going to be working, in the call-in center anymore. I mean, they obviously don't get it because, like, to your point, your questions and John's point, like, there's so much to do, and it's not like one company has less things to do than the other. They all have a million things to do. There's absolutely no way that they're just going to lock in on one and ignore all the other ones. And to go in and say something like, for example, that you have to have the bots. I mean, of course, that would help, right? I mean, it could, maybe. But, or you have to have blockchain because then, it's going to be a lot easier to track all the transactions. Well, of course, but what are you saying no to? What are you ignoring? There's just, if you act as an outsider or somebody that's marketing in this industry or bringing technology to this industry, if you act like there's a sure thing answer to all these things, then we know that you don't know what you're talking about because it's just so much more complex than that. You have to live in the company and understand.
There's certain software systems that are out there that you can buy for tens of millions of dollars, and they tell you they can do everything. And it could be a very robust system that can do a lot or do most of their lines of products that they have. The problem that they don't tell you is it takes 5 to 7 years to develop it or to get it in place. And you have to hire one of the big four to develop the plan in order to get it implemented. Those are the things. And then that costs you tens of millions of dollars. So now you're $100 million for a system that's going to take you 5 to 7 years to implement.
And you don't even know if it's going to work.
And you don't even know if it's going to work.
It's in my opinion, it's crushing the industry. I've seen so many companies where I've gone in and I've said, hey, let's knock 25%, off your legal spend. Oh, okay. Let's knock, 5 or 10% off of some of the extraneous costs. sorry, blank system is launching in 2022. Can't do anything else until then.
Yeah.
And I've seen these companies almost go under.
We've had companies that are in that boat today that come to us and say, can we do a 3 to 5 year deal so that we can implement new products for our company so we can continue to grow while we wait for our new system that's going to come and fix it all.
It's unbelievable. And it's pervasive. I mean, you can go to 10 meetings, and particularly in claims, I don't know about policy admin, but you can go to 10 meetings. I guess it's the same thing.
It's the same thing.
And 7 out of 10, these guys are in the middle of this thing that started in 2012 and is, supposed to be done this fall.
And typically with our systems, if we're going to put up a product for somebody, we tell them typically 90 days. That's just not heard of in the industry as a whole. If they tell you 90 days, you can figure twice that or more.
That's a whole other thing. That's a whole other podcast because that's where the technology evangelism, and that's where it really crushed some of these companies and misses the mark. And a lot of people need to be very careful about who they're listening to, and a lot of the companies that, like, we know, Nick, and a lot of the companies that are marketing to the insurance industry need to be very wary that they have to deal with that issue when they go into a company and be prepared that a lot of these people have had very bad experiences with technology and they're living them right now.
Yeah, when it comes down to it, if you're a startup coming in, you have to take one of two paths. You're either going to take the risk path and become, like American tradition, start at zero and sell risk, essentially take on risk, sell policies. As we discussed, that's a minefield of its own. But then if you're on the other side and you're building technology to sell into the ecosystem, this problem, you have scars, you have implementation. I always talk about just how difficult it is to get on budget. Like you need these tech companies, the founder is usually the salesperson, and they struggle to get to open doors because they're not salespeople. They don't feel the need to hire them, so they can't manage the process. And the next thing you know, they miss the budget deadline, and they're going to have to wait a whole other year before they'll get another chance to pitch at it. Like there's just so many minefields as they come in. It's like it's not about the technology. Technology is great. There are all of these other things that come into play that are actually much more important than the technology itself.
Right.
And you're in both. You're in both minefields.
I am. And, yeah, you're right. And I think one of the things that also plays into that is what experiences the people at the companies have had in their prior lives in other companies, and how does that play into the technology that they decide to move forward with? Because they'll say, "Yeah, I want to buy yours off the shelf," but so many times they want to buy yours off the shelf, but I want to change this, but I want to change that, and what they don't understand is you have to learn how to leave your experiences in the past to some degree and realize that maybe this new technology you're going with is better than what you had before if you just give it the chance.
Oh, yeah. Yeah.
Okay.
That don't want to be in the cloud.
Yeah.
So we'll end this session with what's the future hold for American Traditions or West Point?
From American Traditions, I think we continue to bring out new products that are niches for us. Flood is one of them. We're trying to find new ways to write it, not the same old way. And moving into the future, looking at other states that may have a need, not necessarily just new states that offset the cost of reinsurance here in Florida, but new states that have niches that have a need that we think we can do it appropriately and do it properly. From West Point's perspective, we continue to develop the platform. We continue to look for new clients that have a need for a company that's not just going to say, take it or leave it. Here's what you can have. We're going to look for companies that want to form a relationship, because we are very relationship driven. We do believe in that old family atmosphere, but we also look at the technology and say, how can we help you better manage your business going forward? And I think that's so important. And I think that's what companies are really looking for. Is they're looking for a technology companies that doesn't only produce new technology, but also pays attention to the business need.
Can't say it any better than that. We'll end it there. Wes, thanks for co-hosting. Thanks for driving down the street and getting John on the show. And John, thanks so much for coming in and giving us a bit of your wisdom.
Thank you, sir.
Okay, so until next time, for Wes, for John, myself, thank you, everyone.
Take care.